the result was not very favorable. And by 2012-13, the market steam ran out, and then started the long cycle of real consolidation in real estate, where in 2019, India saw the first listing of REIT. Properties did not make money for a while. REIT was like a fresh lease of life to people. But very soon you saw the market hit by pandemic. And that, along with the fact that there were a lot of supplies that were never delivered to the Indian market, created a situation which was unprecedented. And there were a lot of defaults. People started moving the courts against some of these developers, and then came the NCLT. Now, NCLT was responsible for a resolution of a lot of such stalled projects. And at the same time, there were distress funds. So you saw in India for the first time alternate investment funds being launched by a few asset managers, and they started to deliver high teen returns to their investors. It became fairly popular among the HNIs. REITs by then had also matured and started to give a stable yield of between 6.5% to 8.5%, with some of the risk-averse investors and a lot of foreign investors which did not trust the development system of India, but were very happy to buy into these stabilized assets, started to come into India. So you now saw REITs, you saw now private equity, you saw now these funds which were investing into stressed assets. And then along the side, you had brokers who had reinvented new words, which is giving rise to the boom right now, so-called boom, but I really think it may result in a bubble, called virtual spaces. So people said, I don't want to be buying a full office to manage and live with the pain of it. Developer will be responsible for leasing them. So these virtual spaces, do not even have an allocation of the place, but you still get a shared reward. There were fractional ownerships, and now with the advent of SM REITs, you see a lot of such fractional ownership, which has found way into 50 to 500 crore pool of assets, which can make investment much more sharper and much more clearer, because REITs are very large vehicles where the often assets under management are above 500 to maybe even 2 crores. The total assets listed on the REITs currently are 18 billion. And they are expected to touch 25 billion with listing of another 2-3 REITs in the coming years. So REITs have also now been classified today as the investment which is classified as equity. So you may see a lot of flow from mutual funds. Whether the yields are attractive enough, we still have to see. And therefore, you will see a lot of emergence of other asset classes. Tokenization has started in Dubai. Investors will be exposed to tokenized real estate in India sooner or later. But there is one alternate fund, and there will be a lot of alternate asset funds. So people would invest in data centers, logistics, hospital REITs, even hospitality. By the way, hospitality was a favorite playground of people, even in 90s, when the foreign investors who really wanted a taste of Indian real estate invested in a hospitality asset. So it was that while real estate was not being allowed to invest into the country, which happened only in 2005, investors still saw that flavor in 1990s, because a hotel asset was giving some kind of a return as well as the asset kept appreciating. So I think we will see investors have a lot of treat to alternate assets, tokenization, and as the market matures, the days of just buying a property and keeping it for capital appreciation change to keeping the property for some rent and capital appreciation to a lot of derivative assets. So happy investing. I think real estate in India has a great future.